Hi everyone, hope you're all doing well, and today we're going to talk about Huya because the stock had an amazing day yesterday. The stock was up 20%. I can't find a concrete reason why the stock was up so much. The only thing that is out there is that suggesting that some institutions were buying shares quite heavy, but even that I don't think had the ability to move it up 20%. Kind of suggests to me there's something else going on in the background that we don't know about. Maybe we'll get the information in a few days time, but yeah, overall a pretty good day. And in general, Huya has been on a very good run. The stock is up something like 70% over the course of the last month, which is brilliant. And funny enough, I got a few questions asking if it's time to sell, and I generally have no plans to sell this company as I believe this is a multi-bagger. I believe this is a company that could go probably up another 2x, 3x from here, so I think there's still a lot of potential, and that's been a bit conservative, and that's without pricing in the Douyu merger, because if the Douyu merger happens, obviously this company is going to have a shoot up in revenue, and also it's going to control a bigger chunk of the sector that it's currently in as well. So I think that when I'm still valuing this company as Huya, I'm not valuing this company as if Huya and Douyu merge together, which once again, we then go from talking about this company could 2 or 3x to I believe we talk about a company that will be even go up even more than that, which is absolutely crazy. And I'm going to show you today how cheap actually Huya still is, and I'm going to compare it to another company that's very similar and show you why this valuation for Huya is so cheap. And I'm going to show you them numbers without the Douyu merger. So when I show you the numbers in a bit, if we added in the Douyu merger, it would be even crazier how cheap this company is. So yeah, we'll get stuck into that in a little bit. Before we do get into that though, if you could smash the like button, that would be absolutely amazing. If you are new, please subscribe. If you do want to know when I'm buying and selling companies like Huya, join the Patreon, the link is in the description. And if you do want to start buying some shares, maybe some shares in Huya, there's a link to a free trade account. You join through there and you get a free share as well. But we'll get stuck into Huya because it's done absolutely amazing. I haven't talked about it for a little bit, but I think I've got to talk about it after yesterday's move because it was really good. We still have earnings coming up, which will be interesting to see. That probably will move the company as well. But in general, I'm still amazed that like Huya and even Gang, those are two companies that I started buying last year. Two quite big positions as well. And I still have not seen any like big YouTubers, like 100k YouTubers, pick up on them two companies, especially this one. Like this for me is probably, when you compare it to some of the other stocks in the sector, you can just understand how crazy this valuation is and how cheap it is. And I still don't know why any of these, the bigger YouTuber guys with over 100k views haven't picked up on this stock and started talking about it. Maybe it'll be a matter of time because it's still, in my opinion, this stock is still really cheap, when I'll show you in a minute. But yeah, it just blows my mind like no one's talking about it. But hey, maybe it'll get a little bit of attention after that jump yesterday. Now, if we talk about Huya, first of all, let's just talk about the company. So the company is involved in esports, streaming, and esports is going to have a massive growth. Streaming is going to have massive growth. We've got a new console upcycle, which might not affect Huya that much, but it's going to generate new game titles. And if new game titles come out, it might introduce new streamers to the platform or people that want to watch streaming. So I think that's a good catalyst for Huya. I'm buying a company in a massive growing sector, which is really good. So I'm happy to have that, and that's a great thing. Now let's talk about the forward P. The forward P on this one is still 29. And I think that it could really smash the profit growth going forward, especially if it merges with Douyu as well. So I think that the profit growth on this will be even better than what is suggested. So I think the forward P could actually be generally lower than this, but it's still trading at a forward P of 29, which is pretty good. And when we talk about the revenue side of it, this company is going to grow revenue somewhere around 20 to 30%. I think that analysts have predicted the revenue growth to be a little bit lower than what it actually is going to be. I think it'll be a little bit higher than, they're saying 20%, I think it'll be a bit higher than that. But I think the company will grow somewhere between 20 and 30% revenue growth. So to be buying a company with that sort of growth at this valuation does seem very cheap. And as well, let's not forget Huya has an amazingly strong balance sheet with a lot of cash on that balance sheet and zero debt on here. Now what I'm going to do is just to show you how cheap Huya is really compared to the market and other companies in its sector. I'm going to compare this company to a stock that's very like this company. So like I say, I'm going to show you this comparison without Huya and Douyu merging together, because if they were to merge together, it would be even more crazy than what I'm about to show you. So just bear that in mind. But I'm going to compare Huya to a company called Bilibili. Now Huya is esports and streaming, a bit like Twitch, and Bilibili is a bit more like YouTube, and they're both obviously the Chinese version of Twitch, and Bilibili is the Chinese version of Huya. The Chinese version of YouTube. Now with Bilibili, it's actually a really funny story, this one. I don't for some of you guys might never have heard me talk about this one, because it's a stock that I talked about years ago on the channel. I don't know if any of the people watching now are from when I talked about Bilibili, but it was a company that I actually owned. It came onto the stock market, I believe it was 2018, and the stock was really cheap. At the time, pretty much, it was funny enough because there was hardly any YouTubers on the scene then. I think there was only a couple. I think like there was Jeremy on financial education, Graham Stephan. There wasn't too many more than that, and even then I'm talking like Jeremy on financial education was like 20k subs or something like that. Like there wasn't really a YouTube scene back then, so there was hardly any stocks really talked about. You kind of had to go, find them all yourself. And I started a few years earlier to that, and as we got into like 2018, as me as an investor, I tried to develop my knowledge as an investor and try and discover stocks that weren't, high valuations, and try get some smaller market cap companies that basically could, shoot up to multi-billion companies in the next few years. And it was quite tricky to do because you're kind of doing it all yourself. And one book that really taught me about this is One Up on Wall Street by Peter Lynch. And in that book, Peter Lynch talks about that you can beat Wall Street by looking for companies that haven't been discovered by them yet. And if you buy these small companies that will be multi-billion companies in a few years' time, you can do really well in the stock market, and it's quite easy to do. So I was trying to develop that side of my investment game. Now, I stumbled across a stock called Bilibili at the time, and I looked at the company and I looked at the balance sheet. It was strong. I looked at the business plan. I really liked it. I looked at the revenue and profit growth. I was like, this company's really good. And it was kind of like I had no other information to help me. It was just me trying to develop as an investor. And, when you start off, you learn so much so quickly, and your first few years is a massive learning curve. And when I started buying Bilibili in like 2018, I bought this company kind of like, I was a bit nervous at first because I was just doing it all by myself. And I bought it and the stock went up quite a bit. I mean, I must have bought in something like $13 and it was going all the way up to $18 within a few months. I was like, whoa, this is really good. But I was like, so what do I do now? You couldn't really read any articles on it. You couldn't see any YouTubes talk about it. I was like, I'm not really sure. So I thought, it's done really well. I'm up. It's one of my first investments, just kind of like trying to find a small market cap that could be a future billion-dollar company. I'm going to sell and take my profits. And I was proud of myself because I discovered that all by myself and sold it. The only problem is then when you look at Bilibili now, and like I say, I was buying it at something like $12, $13. The company's absolutely crazy now. It's like over $100. And it just shows you that if you can find them really early companies at really cheap valuations and you can hold them for a few years, it's up like 1,000% now. And it's a company that I should have held, but it was one of those learning curves when you find a company that Wall Street hasn't discovered yet at a very small valuation that can turn into a multi-billion company. Buy it then, hold it for the next few years and watch it grow. And that happened with Bilibili. And at the moment, Huya, in my opinion, is a very 2018 Bilibili at the moment. It's a very cheap valuation, and I think that Huya could do something what Bilibili is doing at the moment. So that's a little story of like, if you do find these gems like Huya, like Gang, that's how I learned from that lesson of like, never sell too early. Look at what they can do in 3, 4, 5 years time, and you can have a big multi-bagger on there. And that's just a company that I learned from and that I should have held from when I bought it, and I would have been up like 1,000% on that one right now. But what I'm going to do is I'm going to compare Huya to Bilibili stock because they are very similar with the industries they're in, and also on the actual size of the company. They're very similar size company, even though one's at a very high valuation and one's at a low valuation. So let's just take Huya and Bilibili for example. So at the moment, Huya is valued at 7.8 billion. Bilibili is valued at 51 billion. So the valuation difference is absolutely huge from these two companies. We look at a forward PE between these two companies, Huya and Bilibili. The forward PE on these companies, Huya is trading at a 29 forward PE. Bilibili has 0 forward PE because it's not going to actually make profit for, looks like maybe 3 years yet. So Huya is way smaller than Bilibili. The forward PE is much better because Huya is growing profit at a good rate now, and Bilibili isn't going to make any for a while. We look at the price to sales ratio. Huya is at a 5 price to sales ratio. Bilibili is at a 34 price to sales ratio. So that's a big and massive difference. When we look at the revenue, the revenue isn't too far off. So at the moment, the revenue for Huya is 8.3 billion. And the revenue on Bilibili is 11.7 billion. So don't get me wrong, Bilibili is a little bit of a bigger company than Huya, but look at the valuation difference. It's crazy when you look at the pretty close on like the revenue side of it, but the valuation is a huge difference. And let's not forget, if Huya merges with Douyu, and that revenue is definitely going to go up when you add Douyu's revenue on top of Huya's. So if that merger happens, Huya will actually be nearly 5-6 times cheaper than Bilibili and doing more revenue. So that's something really key to think about. And when we look at Huya compared to Bilibili, this is probably why Bilibili deserves to trade at a bit more of a higher valuation, because Huya is going to grow at about 20% revenue rate, whereas Bilibili is going to grow at 47% rate. So don't get me wrong, you're paying up for the growth on Bilibili, but does it deserve to be 5 to 6 times the valuation? That's something that you got to think about. Balance sheet, 0% debt to equity on Huya, so it's got a clean balance sheet. It's amazing. Bilibili has 100% debt to equity. So by far Huya has a better balance sheet than Bilibili. And like I say, that's comparing Huya to a Bilibili that Huya doesn't have the merger. If Huya has the merger with Douyu, obviously the numbers are going to be even better on Huya's side. But when you look at them valuations, Huya is so much cheaper. And the only thing that Bilibili has in favour of its company is that it's just growing at a faster rate. But you look at everything else with Huya, you talk about, and you could say that Bilibili has more revenue as well. But obviously we talk about Huya without the Douyu merger. Everything else, the market cap size is totally different. The price to sales ratio is much cheaper. The forward P is even better. The balance sheet's even better. So you do have a little bit of growth. So that's why Bilibili probably deserves to trade at a bit of a premium. But are we talking that it deserves to be on a 5 or 6 times the premium of a Huya? Probably not. We're talking it should be more, and think about if Huya gets the merger as well. Huya deserves to be probably at least 3 times the valuation what it is right now, and that's when it's getting really interesting. And then think about if we put Douyu on top, we could be talking about Huya should be trading probably 4 or 5 times higher than where it is right now. But if we just take Huya stand alone, you can see here the valuation side of it, Huya is really cheap still, and it should be trading at a lot more higher price than what it is right now. So from that point of view, I think when you look at Huya, I have no plans to sell. It's still very cheap, and especially when you start comparing it to someone very similar with Bilibili, it seems like it is quite a cheap company. And like I said, they're all numbers that I'm showing you without that Douyu merger. So for me, I've got no plans to sell. I learned, like I showed you a few minutes ago, I learned my lesson from Bilibili. I bought that company at a very small market cap, saw so much potential over the next few years, and then kind of like a newer mistake into the stock market. I saw the gains and I sold, and if I didn't sell, I would have had a company now that would have returned me over 1,000%. I've got another opportunity here with Huya now, and I've got a great average on Huya. And same again with Huya, I'm not going to make the mistake I did with Bilibili. Like, I'm not going to sell out now or sell out at a 50, 60, maybe even 100% gain when I'm looking at Huya and I'm looking at these valuations and I can see it bringing in, 300, 400% return in the next 2, 3, 4, 5 years. I've got to hold Huya for another 3, 4, 5 years yet. If I hold it for another 3, 4, 5 years, I'm going to have even bigger returns than what I do right now. And it'll be even, we could be talking another 1,000% if that Douyu merger happens. That's a big game changer, so we'll see what happens there. But I felt like it was a good time to update you guys with Huya with that jump anyway, and just show you this company still has amazing upsides right now, I think, from these valuations. So hope you enjoyed it. If you could, smash the like button. If you are new, subscribe. Let me know if you're on Huya. Let me know your averages. Let me know how much you were up, because I know some of you guys will be doing really well after the last few days anyway. So thanks so much for watching. I'll see you in the next video.